If you are new to investing, you may wonder why setting a goal of $100 per month in dividends is a smart move. $100 a month may not sound impressive, but it adds up to $1,200 per year, earned just by holding dividend stocks. This steady income can help cover expenses, build financial security, or be reinvested for greater growth. Dividend stocks pay you regularly, often every quarter or month, simply for owning shares. This means your money works for you, even when you are not trading or selling. Over time, these payments can increase as companies raise their dividends, like getting a raise without changing jobs. Aiming for $100 per month is a realistic target for many investors. It encourages disciplined investing and does not require a huge upfront investment. Plus, it helps create a passive income stream, which is key for financial freedom. Starting with this goal is a great first step toward building long-term wealth that continues to pay you. How much to invest for $100 a month? To earn $100 every month from dividend stocks, you first need to understand how much money to invest. The amount depends mainly on the dividend yield, the percentage of the stock price paid as dividends annually. For example, if a stock has a 4% dividend yield, it means for every $100 invested, you earn $4 per year in dividends. To make $100 per month, or $1,200 a year, with a 4% yield, you need to invest around $30,000, $1,200 divided by 0.04. If you find stocks with higher yields, say 6%, the required investment drops to $20,000. But remember, chasing very high yields can be risky because sometimes those companies face financial problems and may cut their dividends. So, balance is key. Look for reliable companies with stable dividend payments and a decent yield. Another option is to build a portfolio of multiple dividend stocks to spread risk and increase chances of consistent income. Over time, reinvesting dividends can grow your investment and reduce the amount you need to invest initially. Understanding how much to invest helps you set clear goals and stay focused on building a dividend portfolio that pays you $100 per month, reliably and forever. Top monthly dividend stocks to consider. When looking for stocks that can help you earn $100 per month in dividends, it's important to pick companies with a strong history of paying reliable dividends. Some stocks pay dividends monthly, which can be great for steady income. Here are a few types of monthly dividend stocks to consider. Real estate investment trusts, or REITs, like Realty Income are popular because they often pay monthly dividends and have a long track record of consistency. REITs invest in properties and pay income to shareholders from rent and sales. Another option is business development companies, BDCs, such as Main Street Capital. They invest in small and mid-sized businesses and usually offer higher dividend yields with monthly payments. Utility stocks like Dominion Energy may pay dividends quarterly, but their payouts are stable and often grow over time, making them good for long-term income. Look for companies with strong financial health, steady cash flow, and a history of increasing dividends. Avoid stocks with unusually high yields that might signal risk. Building a portfolio with a mix of these monthly dividend stocks can help you reach your $100 per month goal and provide a steady income stream that lasts for years. Balancing yield and risk in your portfolio. When investing in dividend stocks to earn $100 per month, it's crucial to balance yield and risk. A high dividend yield might seem attractive, but it can sometimes mean the company is struggling or may cut dividends soon. On the other hand, very safe companies often have lower yields, which means you need more money invested to reach your goal. To manage this, diversify your portfolio by including a mix of high yield and stable dividend stocks. High yield stocks can boost your monthly income, but add some stable, blue chip companies to protect against sudden drops. This balance reduces risk and helps keep your dividends steady over time. Look at the company's payout ratio, how much of its earnings it pays out as dividends. A lower payout ratio usually means the dividend is safer because the company keeps enough earnings to grow or handle tough times. Also, research the company's financial health and industry trends. Some sectors like utilities and consumer staples are less risky and offer steady dividends, while others like energy or real estate can be more volatile. Balancing yield and risk wisely can help you build a dividend portfolio that pays $100 every month steadily, and forever. The power of dividend reinvestment plans, DRIPs, dividend reinvestment plans, or DRIPs, are a powerful tool for growing your dividend income over time. Instead of receiving your dividend payments as cash, DRIPs allow you to automatically reinvest those dividends back into buying more shares of the same stock. This means your investment grows without you having to add extra money. By reinvesting dividends, you benefit from compounding, earning dividends on dividends. Over the years, this can significantly increase your shares, and as a result, the amount of dividends you receive. It's like a snowball effect, helping you reach your $100 per month goal faster. Many companies and brokers offer DRIPs with little or no fees, making it an easy and cost-effective way to build wealth. This strategy also encourages patience and long-term thinking, which is key to successful investing. Starting a DRIP early, especially with solid dividend stocks, means your money works harder for you. Instead of just collecting dividends, you grow your stake in the company, which often leads to higher future dividends. In short, DRIPs turn small, regular dividends into a growing income stream that can pay you forever. Real-life success stories of dividend investors. Many investors have built long-lasting wealth by focusing on dividend stocks that pay consistently over time. One famous example is Warren Buffett, who values companies that generate steady cash flow and pay dividends, using those earnings to reinvest and grow his portfolio. Another inspiring story is about ordinary people who started small, investing in monthly dividend stocks like Realty Income or Johnson & Johnson. Over the years, by reinvesting dividends and adding to their investments regularly, they built portfolios generating hundreds of dollars each month, even reaching $1,000 or more in passive income. These success stories show that earning $100 per month in dividends isn't just a dream. It's achievable with patience, smart choices, and consistency. Many retirees rely on dividend income to cover their living expenses without touching their savings. Hearing real examples proves the power of dividends to create financial security and freedom. It encourages new investors to stay disciplined and trust the process, knowing that steady dividend payments can grow and support them for life. So, if you start today and invest wisely, your own success story could be next. Dividends really can pay forever. Tips for building a sustainable dividend income stream. Building a dividend income stream that pays $100 per month requires strategy and discipline. First, diversify across different industries to reduce risk. Never invest everything in a single company or sector. Second, choose companies with a solid record of growing dividends. These firms are more likely to continue paying and increasing dividends in the future. Third, use dividend reinvestment plans to grow your investments faster through compounding. Fourth, avoid chasing extremely high yields, as they often come with high risks and potential dividend cuts. Finally, review your portfolio regularly and make adjustments based on market trends and company performance. Staying informed protects your income stream and supports long-term growth. By following these tips, you can build a dependable dividend portfolio that steadily pays you $100 a month and grows over time. Thank you for watching. If you found this valuable, hit the subscribe button and join our growing community. What is your biggest challenge with dividend investing? Share your thoughts in the comments below, and be sure not to miss our next video. I tried a $0 to $10,000 challenge. Here is what happened.